Well, greetings everyone, and welcome to the Argonaut monthly video covering February 2025. Now, the stock market events of the month included a sell-off in American technology stocks, particularly those geared towards artificial intelligence. We've also seen a significant downgrade of near-term US growth expectations on tariff risk. Now, you can read our thoughts on this in our monthly commentary. But in this month's video, we are going to concentrate on developments in Europe, particularly regarding defence and German parliamentary elections. Now, we've called this month's video Make Europe Great Again. There's an obvious question mark around this, which we will now explore. So it's fair to say that European governments have been dragging their heels on increased military spending, and to the annoyance of the Americans, have been enthusiastic spenders on everything else, including welfare, net zero, and even Russian energy. Europe believed that the US would continue to pick up the bill, but at the same time, they also believed that they would have influence over the direction of policy and that American and European interests and priorities would always be closely aligned. If there were in any doubt, a new reality dawned during the Munich Security Conference. America, according to its vice president, no longer shared the same geopolitical priorities nor the same Davos political values as the European elites, which were criticized as being undemocratic, elitist, and focused on luxury, self-indulgent problems like climate change rather than real-world problems like mass immigration and Islamic terrorism. And trust me, said J.D. Vance, I say this with all humour, if American democracy can survive 10 years of Greta Thunberg scolding, you guys can survive a few months of Elon Musk. So instead of Ich bin ein Berliner, we got Ich bin kein Ukrainer. Perhaps the best quote of the Munich Security Conference was given by Armin Papperger, the CEO of German weaponsmith Rheinmetall. If you don't invest, he said, if you're not strong, they handle you like kids. It was very convenient for the Europeans over the last 30 years to say, okay, spend 1%. It's fine. If parents have dinner, the kids have to sit at another table. The US is negotiating with Russia and no European is at the table. It has become very clear that the Europeans are the kids. Now, European leaders have responded with tough public talk of continuing to support Ukrainian President Zelensky, raising expectations that Europe will plug the gap left by the US suspending its military aid to Ukraine. But in private, they must know that without US support, Ukraine will be forced to make peace, irrespective of the hardware assistance, since the software and the intelligence of NATO is also American. And Europe does not want to be on the hook for financing an indefinite war or defending itself from Russia without American support. So Europe had a summit in London where they huffed and they puffed and they prepared a peace plan to send to Washington rather than Moscow, which the British and the French supported, but the Germans and the Italians refused to back. So the cold reality is that we seem to be heading for an end to the war because this is what Trump wants, irrespective of whether it is perceived as just or likely to last. Now, in the short term, this will be bullish for Europe's economy and stock markets, and especially those in Eastern Europe. Now, we started investing in European defense stocks in April 2022 at the start of the Russia-Ukraine war. We subsequently outlined our thinking in a blog post called Guns and Ketosis, Investing in a New Cold War Era. And I'll now recap the most important points. The fall of the Berlin Wall in 1989 began a 30-year bear market for European defense stocks. And that was likely to change because the entire annual revenues of the quoted European defence industry last year, including the UK, were just $132 billion. Now, we projected that if NATO European spend increased from 1.5% of GDP to 3.5%, and 50% of that was spent exclusively on sourcing hardware within Europe, then annual industry revenues would in fact double. Now, many of Europe's biggest defense companies have significant civil or non-defense businesses. Some are exposed to the US where budgets aren't going to be growing. And it is also a long cycle industry where orders today may take many years to translate into sales, profit, and cash flow. Whilst companies will also face operational issues, ramping up manufacturing, wanting assurances from governments that orders won't be pulled if the political wind changes direction. Now, German weaponsmith Rheinmetall, the global leader in the manufacture of NATO standard artillery and tank shells with over a 50% market share, has been our biggest position, with the share price having increased sixfold since we first invested. Unlike most defense expenditure, most of or much of Rheinmetall's order book is short cycle, showing up in near-term profits and cash flow. And irrespective of whether there is a cessation of hostilities in Ukraine, NATO ammunition inventory is now dangerously low, and we see Rheinmetall as the most geared towards German military spend, which has the most upside in absolute terms. Overall, we think it's time to be more discerning in European defence, and now we have a short position alongside two longs in the sector. Now, last month also saw a new Bundestag or parliamentary elections in Germany, whereby the Christian Democratic Union achieved the highest share of the vote at 28%, up from 24%, beating the Social Democratic Party, who only got 16%, down from 26%. Now, having previously ruled out cooperation with the so-called far-right Alternative for Germany, which won 21%, up from 10%, CDU leader Friedrich Merz will now attempt to form a new government with the SDP, which will necessarily involve dropping most of the CDU's policies which were distinct from the previous government, particularly those on reducing migration and lowering energy costs, thus ensuring, in our view, that the new coalition likely fails and that the AfD continues to gain popularity as the main opposition to the Uniparty. Now, we're told that the AfD election result was the best for the far right in Germany since 1933, when the Nazi Party won 44% of the vote. It seems to me that this is a somewhat ludicrous groupthink comparison. The AfD was originally founded as an economically libertarian party in 2013. Its main policy pledges involve ending mass immigration, opposing net zero, and skepticism towards the European Union and the Ukraine war. Libertarian means less, not more government. By contrast, the Nazi Party's policies involved complete government control of the economy, the end to free speech through a police state, and the acquisition of living space in Eastern Europe through force. The leader of the AfD, Alice Weidel, is a former Goldman Sachs banker, fluent in Mandarin, and married to a lesbian Sri Lankan filmmaker. By contrast, the leader of the Nazi Party, Adolf Hitler, was a failed artist and former army corporal, a militarist with psychopathic tendencies, particularly towards Jews. There is something deeply flawed with the political establishment that pretends not to know the difference. Now, the stock market and the bond market are currently very excited about the CDU SDP negotiations that propose exempting defense spending over 1% from German fiscal rules with no upper limit, and the setting up of a 500 billion or 12% of GDP over a decade of a special infrastructure investment vehicle. Now, since the CDU and SDP do not have the required two-thirds majority in the new parliament, this would require the previous parliament to approve these new rules with Green Party support, so no doubt including all kinds of green grifter spend likely to raise energy bills. Now, bond markets have reacted badly by adding 20 basis points to German long-term borrowing costs and 15 to the rest of Europe and that's gone up further today. No one in the establishment seems to be bothered about the democratic legitimacy of the policy making process, relying on the previous parliament rather than the one just elected to pass the new laws. So the initial reaction of the failed European political class, aka the Uniparty, to the crisis of sitting at the kids' table is still one of anger and denial. It is to double down on what has got Europe into such a mess, still apparently oblivious to the fact that green energy will never be cheap or reliable, or believing that more government can solve the problems created by big government. Whether it be the Draghi report or the Lagarde von der Leyen ECB blog, Europe's uniparty is now so cringeworthy that it must be swept away in a tide of democratic accountability if the continent is to have a successful future. Making Europe great again seems unlikely, but making Europe not stupid again, Mensa rather than Mega, Mensa like the club for the people with the highest IQ, should now be the focus of sensible policymakers.